Welcome everyone to binary.com. Welcome to the webinar called Trading the Waves with Fractals. This is Tuesday the 16th of September 2014, and as always we start these webinars that are focused on education at 7 p.m. UK time. Once again, my name is Chris, by the way. This is hosted by binary.com. Before the webinar topic starts of today, we will actually have to show you this risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and it may not be suitable for all investors and traders. Please therefore seek the advice of an independent financial advisor for more information on that. This webinar is for educational and informational purposes only. And by continuing watching this webinar, you agree with the disclaimer mentioned on this slide. Alrighty, so thank you for your attention. Very important topic. Today we will be focusing on how to spot the wave, why and what are fractals and how can they impact price and what are they useful, why are they useful, and using the tools for your own trading. So fractals and wave in the spotlight for today's session. What is a fractal? That's where we're going to start with. Fractals basically originate from outside of trading. They're a mathematical, in a way, element that has contradicted to many mathematicians. I'll explain more in a second. Fractal is basically a natural phenomenon. It's something that basically repeats over and over again on all basically views. No matter how you look at it, it would have a similar structure, no matter if you look at it from close or from far. All right, it's a repeating pattern. And just to give you already a small hint, obviously we know that the Forex market and the market in general, other markets, tend to repeat themselves in many patterns, right? So the fractal is important for the market because the market is a fractal nature. And no matter if you look at a chart basically of a 1 minute chart or a monthly chart or even a yearly chart or a daily chart, it will be difficult to distinguish, if not impossible to distinguish, without previous knowledge, whether you're looking at something from very close or very far, because the patterns are repeating. That is actually a fractal, and that's the link why I'm talking about fractals, because the market is a fractal. Market is a fractal nature. And that's why fractals and knowing what fractals are is useful, is important, and we can gain advantage of that with that knowledge. Basically, if the replication is exactly the same at every scale and every level, it's called a self-similar pattern. This is how a fractal looks like. And all of these patterns, basically the pattern you see here right in front of you is exactly the pattern that will be occurring in any spot along this pattern. So what you see here would be exactly the same what you would find when zoomed in. Now, fractals are not only limited to the market, they actually occur in many things like images, sounds, structures, not structures, excuse me, nature, art, technology, law, and even the way sound behaves. It's quite fascinating. Anything what linear geometrics cannot explain, for instance, of course, geometric shapes such as a round or a square could be explained by geometric patterns, but certain shapes cannot be. They're very difficult to measure. They're known in, as far as I know, I'm not a mathematician, but as far as I understood, they're known in the math world as, you know, unknown shapes or difficult to solve shapes or something like that. I forgot the exact terminology, but fractals can actually solve a lot of that. And the math world dismissed the concept of fractals. I don't know exactly, but I think in the 70s. Because they did not think the concept could be true. At this moment, it's not as it's accepted, and not like back in the 70s. It was considered far-fetched. Now it is accepted, and fractals is basically a way to understand certain shapes and other things that we see in our environment around us that cannot be explained by linear mathematics. So it's a very fascinating topic. For instance, frost patterns, right? Those would be typical things that, how do you explain it with a linear geometrics? Or a fractal defrosting pattern on Mars. Now, look at this. Very similar, all of its behavior and patterns here kind of repeating throughout this pattern, right? Just like here too, I forgot to mention each branch with the same branch, right? And that branch again with the same branch. The same structure and style. Here on the left is, I think, a pattern what the father of the fractal developed, Benoit Mandelbrot, if I say it correctly, I'm not sure. Mandelbrot maybe would be the more American way of saying it, but I'm not sure actually. I think it's Mandelbrot if I think about it now. This is typical for the fractal, right? You can see here shapes, smaller shapes fitting in bigger shapes fitting in even bigger shapes. Look at the right here, this Icelandic coast. Everything looks very similar in self patterns, right? And regarding the coast, actually, the coast is a perfect example of something we see in nature and cannot be explained so well by geometrics. Because if we try to measure a coastline, such as the coastline of Great Britain, then you can see, for instance, that it depends on the length of measurement tool that you use to see how long that coastline is. If you take a measurement tool that consists of 100 kilometers, the coastline is going to only be a few hundred kilometers, because you can fit a couple of those slats around Great Britain and it wouldn't be too long of a coastline. But make those pieces not 100 but 20 kilometers and you would be able to fit a lot more of these pieces around Great Britain, and all of a sudden Great Britain has a bigger coastline. And then if you use smaller ones, not 20 but 5, the coastline again increases. So how do you measure the coastline with that? If you go in ever decreasing increments. A coastline is one of those difficult objects that I referred to at the beginning that really were difficult to explain until we bumped into the theory of fractals. All right? So, price making repetitive patterns on all time frames in the market. Let's go back to the market. But it's with this connection to other things outside of Forex and trading, I wanted to show that basically the Forex market is not a geometric object, but it's more natural object that basically has psychology in it. It's not something that is really mathematically possible to calculate, although it does work with numbers. It's something that's fractal of nature. So price makes these repetitive patterns on all time frames. That's a theory. And this advantage of knowing the theory means that it provides more knowledge why and how the market moves as it does. But there's also an indicator. It's called the fractal indicator. And this is the practical part of what I want to explain. And this indicator helps identify what spots price is changing the pattern. So the theory is great to know. The theory is useful. The theory is good to know that basically you understand the market more. But the fractal indicator specifically helps with identifying the theoretical I can't say it, the theory ethical the theory behind the fractal. Fractal indicator, let's talk about that. The middle candle of minimum 5 candles, right? We're talking about what is the fractal indicator. I want to explain what that indicator is. And Beanie, I see your question. I'll discuss that later on, okay? So hang in there. Fractal indicator basically indicating where the fractals are, okay? Now, Bill Williams took that concept and introduced it into the Forex market because although Mandelbrot was the one that developed the concept and the theory itself, Bill Williams, a very famous trader, was the one that took that concept and developed it in the world of trading in Forex. And he was the one who said, okay, how do we quantify it? How do we identify a fractal in the Forex? So he came up with the fractal indicator. And the fractal indicator is as follows, and that's what I'm going to explain. It's the middle candle of minimum 5 candles, 2 to the left and 2 to the right, and it's the candle with the highest high or with the lowest low. There could be more candles to the left or right. I'm talking about a minimum of 5 candles, but there could be 20, there could be 100, there could be 200,000. It doesn't matter. The only thing that matters is the minimum number. The more candles to the left and to the right, the more important that particular fractal does become in general due to support and resistance. So here you see these triangles on both sides of price. You don't see them on every candle, but some of these candles have fractals. These triangles are fractal indicators. What the fractal means basically is that these are the levels where the similar patterns repeat. So when price makes one fractal and then another and the next fractal, that's basically the fractal 2 candles to the left and 2 candles to the right is what Bill Williams discovered is the underlying fractal nature of the market. Each particular natural object, like for instance the coast, has its own fractal number. I don't remember what the coast unfortunately was by heart, but the number for the market is 2. So 2 candles to the left and 2 candles to the right. Now, why that is 2, I don't think it's really too important. He did a study on that, so you can probably find it somewhere. For us, from practical point of view, we can use the fractals for our trading purposes to identify where support and resistance is. And at what point does the fractal break? At what point, when the fractal breaks, could we expect price to continue in that direction or not continue in that direction if it doesn't break? Here in the contracting wedge, for instance, you see fractals not breaking B in the bottom here and not breaking A, C, and E. But when price breaks D, the fractal near D, you get a good downside. So that's how you can use fractals. Fractals indicate the main levels you want to be cautious of, because if fractals break or don't break, it gives you traders information about the market. Fractals that make higher highs and higher lows indicate that price is making an uptrend. Fractals that are making lower lows and lower highs indicates that price is making a bearish momentum or a downtrend. So fractals have many values. They also are just a very easy visual tool for spotting price, because you don't have to search what are the main tops and bottoms, which levels are key to keep an eye on, because the fractals already do that job. And although you might think that's pretty easy to see without the fractals, if you were to remove the fractals, you would be surprised that it's not as easy visually to spot them. Obviously this one is easy at the very top, because that's the turning spot. So spotting the fractal there is easy, just like here is easy. But spotting fractals that are more hidden would be tougher and be more demanding to find. All right. So trend, using them for trend, using them for support and resistance, using them for breakouts, for bounces, for filters, by saying, okay, price is too close to a fractal, I'm not going to trade it, by using them as an opportunity or trigger or even an entry. There are many things we can do with fractals. Here you can see two charts, left and right. The fractals in trading, they appear on all time frames, right? And price moves on all time frames. It's difficult to say whether the left chart is a 5-minute chart or a 15-minute chart or the chart on the right is a 4-hour chart. They could be totally interchangeable and we would have no clue. And the fractals too, they appear just as often. So, price is a market is a natural phenomenon. I already talked about the fact geometrics cannot explain the market because price follows the path of least resistance. All right. When price follows the path of least resistance, basically, it's when you picture, for example, water flowing down the mountain. Right. It will choose the method and path that is the fastest for the laws that are in play. The law, for instance, of gravity is in play, which means that water will flow lower. But how does it flow lower? When it bumps into something that's very big, water will not go through it. It will divert from it. It will go around it. It will go under it. It will not push it aside if it has enough mass. Price in the market does the exact same. If the support or resistance is strong enough and big enough, price will not be able to go through it. And price will do, just like water does, will go around it or under it. And in the market, that would mean price bounces off of that support or resistance. So price will always choose the path of least resistance. And that depends, what is the path of least resistance, has to do with the market psychology. The market psychology is the sum of all participants in the market. All of us that are participating have an impact. Some a bit more, some a bit less. And the grand sum of that is the market psychology. This in turn impacts price movements. The price movements basically will make repetitive patterns, various patterns like chart patterns, price patterns like candlestick patterns, Fibonacci patterns, wave patterns, time patterns, all kind of patterns, angle patterns, it's you name it. The market is full of self-similar patterns on all time frames, on all products, and all currency pairs, etc. So it's a bit of a lengthy explanation, but at the end of the day, fractals and psychology explain why price moves as it does and explain why we see the patterns on the charts. And when we see those patterns, it's up to us as traders to recognize them and recognize them with more success and recognize them with such a success that we can profit from it in the long term, right? It's up to us to look at those patterns and be able to read them, interpret them, and capitalize on them. Whether we do that successfully is up to experience and how much we practice. So this is something that depends from trader to trader. It takes time and experience to get to that point, right? So that's basically what it all boils down to. With the market as a natural element, such as a coastline, and the market not as basically a mathematical object, maybe such as, for instance, a square, you understand, have more understanding for the market structure and why price does what it does. You will be less disengaged or less frustrated by the market. You would start to understand the value of support and resistance, the value of momentum, because that, if the momentum is big enough, could let price push through support and resistance. Realize that if water stream has a lot of speed, it is able to set aside objects with bigger mass. For instance, a pebble might not be pushed aside by a very small stream of water, but making it a bit bigger, and a pebble will be carried away with the water. So it's basically speed of water versus strength of object. The same is true for price. Speed of price, momentum, versus the heaviness or the strength of support and resistance. And that all can be explained by the path of least resistance and market psychology. All right, so market psychology, path of least resistance, ultimately then influence those patterns. Here I have it summarized. Path of least resistance leads to human psychology, leads to group psychology, leads to market psychology, leads to repetitive patterns. One of those patterns is wave patterns, as I said, and that's very important because that will be part of the webinar tonight. Oh. Here we see, for instance, the pound-dollar 1 hour chart. All right, and here we see how the waves, which is a type of pattern, could be classified with these numbers. It's just a way of identifying patterns, numbers and letters. But basically what they represent are patterns, right? Wave analysis uses 1, 2, 3, 4, 5 for momentum, ABC or WXY or WXYXZ for corrections. And these patterns have rules, wave patterns have rules and guidelines. These wave patterns are just like other patterns such as chart patterns. They give an advantage to a trader by having more approximation, more idea what could happen with price in the near future, in the next upcoming candles. Obviously, the more we look into the future, the more difficult it is to pinpoint exactly what price is going to do. Because as price makes new history, as price goes into the future, we get more information. So when we incorporate that information, we're going to be able to understand whether indeed what we thought would happen will happen. For instance, here, if we look at the brown letters, the numbers, we see wave 3. At the moment, I'm thinking this is a wave 4 for wave 5. If price goes sideways and then starts to break above the top, well then indeed there's a high chance that price is confirming the analysis I had. But how about if price starts to fall like a stone and it goes through that blue line here, that light blue line? Well then obviously this 3, 4, 5 is incorrect, and I could hang on to that and still continue to say that it's going to be a 3, 4, 5 for the next few weeks, but it's not. And that's the disadvantage if you don't immediately incorporate all new information, is that eventually, of course, the analysis is going to get outdated as well. Now, the analysis could be correct, but then eventually it's still going to be outdated, because after it moves up to wave 5, what then, right? All I'm looking at is a wave 4 and 5, but eventually if it does do that, a wave 4 or 5, what will price do after that? I'm not even looking at that point, because it doesn't make sense. I want to see first the new information before I start to make those judgments. Right? So, but that depends. Every wave analyst is different. So, sometimes if you look at a higher time frame, you obviously also look further in the future, just by the very definition of the fact that you look at a higher candle and a higher chart, time frame chart. But the path of least resistance is something that we can understand to a certain degree, that we can see to a certain degree. But the problem is, eventually, if this is now at the blue line, we have a pretty good understanding that price could do this. But after that, will it do this or this? we probably have two options, of which we maybe have one preference. So let's go with the upper one. But after that, then it starts to become more fuzzy, because then we have this, this, or this. Maybe we would expect this, but it could be this, then this, or this. So you can see we branch out in the future. And although we can make assumptions for every spot, every decision point, every moment where price should follow the path of least resistance, and although we have a favorite maybe, the more we go into the future, the less obvious that becomes, the less sure we are, the less, of course, also, the higher chance, of course, also that somewhere along the line we chose the wrong path, and maybe we chose this middle path right in here. We have the orange circle, but it was the higher one. And then, of course, eventually that particular branch of analysis gets outdated, right? So it doesn't make sense to look too far. So this was analysis I did on one day, I think somewhere in the summer, where I expected a wave 4 and up to wave 5. This is what happened the day after. Price, if you don't see the difference, I'll go back and forth here, you see. Price went down and then up, you see. Went down to the 38.2 fib and then up, you see. So right here. Oh. Price bounced off the 38.2 fib, right there. Here again, pound dollar 1 hour chart. This was somewhere this month, in fact, in September. You can see I thought a fifth wave of 3 waves finished. And then we got an ABC correction for wave 4. And then this is a wave 5 magenta. And within wave 5 magenta, look at that. You have a wave 1, 2, 1, 2, 1, 2, 1, 2 to complete wave 5 of blue. That completes wave 3 of purple. Wave 5 of purple completes wave 3 of red. Wave 5 of red completes wave 3 of brown. Expecting a wave 4 of dark red, for dark red 5 of magenta 5. Right? This is what I did at that point. Now, the exact Elliott wave idea, again, it's 1, 2, 3, 4, 5 for momentums, ABC or WXY for corrections. Now, this is not necessarily an Elliott wave webinar, although it's trying to explain basically how you can use fractals and waves to your advantage. So it's assuming that you already have a bit of wave background. If you don't, we do have a webinar on waves. It was one of the very first webinars I gave with binary.com. So take a look at that for more information, all right, on waves. But waves, although it's considered to be very confusing by many traders, if you use it kind of like an extra thing and not totally base everything on it, and just use it as a kind of like a rough guideline of what price could do, it becomes a less pressure and it becomes a bit less serious, and you just see it more as fun. You just see it as a nice tool to understand the market better, and I think that is a better way of handling it than really putting a lot of pressure if this particular analysis of the waves is correct. Wave patterns are great, but sometimes they are indeed tricky. So you want to keep it loose. You want to keep it not too serious. If you do it that way, I think it has more value. Use it as a confluence tool. Use it as something extra together with chart patterns and candlestick patterns and fib patterns, and that way it has more value, I think. And in that way, you'll get less frustrated with it, right? Because it's just an extra. And then you actually, if you look at it that way, you'll see that it's not that complicated. You'll see that it's not so demanding and annoying, because you put less pressure on it, right? If you look at it that way, it'll be more natural flow. But it does, of course, obviously take some experience. I mean, I've been looking at it for years and years. That kind of experience you're not going to get right away with when you look at it the first time. So you're going to be more wrong with at the beginning, right? But you get into a flow of things, and you'll soon realize that when you look at waves, it's all about whether the next wave will be an impulse or correction. And it's just like putting pieces of the puzzle together. If this is impulse and the previous one was corrective and the one before that is impulse and now we're getting again correction, well then looking at that, the odds are that it's a pretty good chance we'll get again an impulse. So you're kind of like just looking like at the previous price. Was it impulsive or correction? And you're looking at the last few swing highs, swing lows and doing the same and then trying to make an estimate, a guesstimate, whether what the next correction, the next leg will be, momentum or correction. That's really all it is. A lot of traders make it, and traders and analysts make it a lot more in a way than it is, but it's just looking and trying to make a guesstimate. Is the next move a correction or an impulse? Well, anyhow, that was the wave 4 I expected, and look at that. I made the colors a bit different, so don't get distracted by the colors. It is the same situation. Look at the big fall here. You see that fall right here? Right here, that fall was here too, right here, all right? So yes, it is the same. Got the wave 4 and boom, got the downside. Now obviously, me showing you 2 charts of where I had it correct means nothing, but it's not the point to show you how great this analysis is of mine or how great the wave analysis is necessarily. I just wanted to give you an example of how you can use patterns to your benefit, and it's up to you, of course, to look into it, to dive into it, to use it, to practice it, obviously, because only you can, get to that level that you feel comfortable with it. Me showing you two screenshots will not do that, of course. So advantages of fractals. Of course, number one, that is recognizing support and resistance, in my opinion. Easy way of spotting that. We can use fractals to set stop losses, to trail stop losses for trade management purposes. You could put stop losses above or below fractals. We can use fractals to trail stop a trade in trade management. We can take profit right before or below a fractal. We can enter upon the break or the failure to break a fractal. The recognition of the market structure and recognizing chart patterns such as candlesticks, charts, and last but not least, waves. So I think they're a great tool. I think it makes trading a lot easier, and I think the life of a trader is simplified with it. And it's a small indicator. It doesn't really block trading that much. On these charts, you don't see indicators, the fractal indicator, by the way, because I try to keep it as clean as possible, because this analysis is done for others besides myself as well, and I keep it away because I don't want to overcrowd the charts. That's the reason. Okay. If I had the choice, I would have them on, but it would become a bit too busy for the others that look at it. So this is the Euro-dollar hourly chart, and this bottom here is a fractal. All levels with 2 candles to the left and 2 candles to the right are fractals. Is that clear, by the way, that concept? Maybe I should dive into that a bit more. 2 candles to the left and 2 candles to the right, because I didn't explain that maybe enough. So, for instance, here's a candle, and here's a candle, and here's a candle, and here's a candle, and here's a candle. That middle candle will have a fractal on top. And why is that? Because the candle to the left and the candle to the second left have highs that are lower. The candle to the right and the second candle to the right of that middle candle have highs that are lower. When the middle candle has a higher high, it will have a fractal on top, indicating that that high is a resistance level. Now, in this case, this is one variation, but you could have, it doesn't matter what shape or pattern you have. You could have a candle like this, a candle like that, a candle like this, a candle like that, and a candle like this, for instance, this too would qualify. Although they're not in a beautiful synchronized shape as the left example, the right example too, the candle in the middle has two candles to the left and two candles to the right that are lower, higher lows. So even though the candles left and to the right of them are not lined up as nicely, it's still a fractal. That middle candle is a resistance, the high of that level. As I said, there could be tons of candles next to it. It will stay a fractal, even if before that price was coming below it, and even if price after that goes above it. That particular level stays a fractal. Just like in this example, this level and this level are fractals too, but from the bottom. Why? Because two candles to the left and two candles to the right have candle lows that are higher. Candle lows that are higher. Right? Is this candle on the right where I have an orange circle, is that a fractal? Where I have the arrow. And the answer to that is no. No. Even though two candles to the left do have higher lows, although this one on the very left is very doubtful, it's about even, but okay, let's say that this lower. We don't have two candles to the right. And that's something you want to be careful of. There must be two candles to the right closed. If one candle is next to it, or if a second candle is next to it but is not closed, it's not a fractal that is valid yet, as yet. We need two closed candles for that fractal to be fully confirmed and never ever to disappear from our chart. So if there's any questions about the fractal indicator, let me know. All right. So this Eurodollar downtrend, you can see, and we see expecting wave 5 to finish to the downside here, as you can see. And this is that, you see these green lines? Those are these lines here at the bottom. So you see a big downtrend. You see I have wave 3 orange in play. That's being finished at this moment. And what happened when price went through the green? Boom! Big break to the downside, right? Look at that. Beautiful break for follow through indeed with the waves to the downside. Beautiful example, very momentum, big fall of price, and as expected, was looking for price to break through green for that downside. And when price broke through green, it happened very fast. Here you see which candles are fractals. This is maybe a better explanation. You see this candle at the top, you see fractal on top. Why? Because that candle with the fractal has a high that's higher than the two candles to the left and higher than two candles to the right. There are more candles to the left and to the right, but that's okay. That's a resistance. This is a resistance. This is a resistance. And you can see that when price came up to this level, it couldn't break it. Sometimes, though, price does break it. Look at this. This fractal is a support level. Price broke through it. That indicated a change in dynamics, and boom, downside. Here, the fractal didn't get broken. So the dynamics didn't change, stayed down. Not always when a fractal breaks, the dynamics necessarily change. Here we broke a fractal, we got some upside before we move down again. So the effect doesn't always have to be tremendously long. And you can see there are many fractals on this chart, roughly quickly counted. There are about 50 of them, give or take. I counted just very quickly. And you will see less fractals as you go up the time frame scale, right? The higher the time frame, usually speaking, the fewer fractals you'll see. So with fractals, you can identify what are the tops and bottoms of expanding wedges. For instance, here you see the A, B, C, D, and E in purple. Notice that any of these tops, or every of these tops and bottoms, is a fractal. Not every fractal is a massive important part of the wedge, but every fractal, every part of the wedge is a fractal. And even the fractals that are not the main part of the wedge, they could be inner parts of the wedge, right? This fractal in here is part of a three-wave move that completes basically the D part of the wedge, right? So these fractals are internal parts of the D leg, all right? Tops and bottoms obviously are fractals as well. And here you see a ton of fractals on a 50-minute chart. Same pattern, same movements of price. Here's a chart without fractals. And to me, it just looks messier. If I compare this with this, I understand and comprehend what's going on here a lot quicker. Now, of course, there's two trend lines on it as well, so it's not maybe an exact fair comparison because the trend lines help structure our view of the market. But in my opinion, it's pretty straightforward. More difficult for our eyes to analyze and to have an understanding of what's going on. It just takes more time for us to dissect and to handle this information. When we have these fractals on the chart, things just become instantly a lot more easier to digest. And when we add some trend lines on it, right away we can see a contracting wedge. And look at the funny thing is, this is confirming the fractal nature of the market. This, traders, is a 1-minute chart on the euro dollar. And look at that contracting wedge. Look at how the fractals indicate support and resistance. And compare that with this one, which is a daily chart. And there's not much difference a trader could spot. Fascinating stuff. And this is again the hourly, something smack in the middle in a way between the minute and the daily chart. Here two price patterns that really are difficult to tell apart or not at all. And fractals indicating, for instance, where flags are happening, like bear flags, which are chart patterns. So fractals are patterns that help not only with wave patterns, but help identify chart patterns, candlestick patterns even. Like this, for instance, here. Bear flags, bull flags, they help connect trend lines, expanding wedges. And the break of those patterns, you see breakouts, right? Now, why do I say correct? It's because that bear flag, for instance, is a break to the downside, which is technically what a bear flag should do. A triangle like that, one would expect a break to the upside because we had a momentum to the upside, but basically broke to the opposite side than expected. So where you see opposite break, the break occurred to a different direction than one would normally think. And correct says, okay, this break actually did as it should. Breakout candle is a wick here. Danger sign. And the price moves with higher highs and higher lows when you look at these fractals, right? Even on the 50-minute chart, we see here a break of the fractal and trend line indicating upside. So all in all, to summarize, basically the fractal, a very instrumental part of understanding market structure, a very useful tool. The fractal indicator is a very useful tool. Besides the fractal as a concept for understanding market structure, the fractal indicator itself is a very useful tool to dissect and understand wave patterns, chart patterns, candlestick patterns, fib patterns, put trend lines on, digest market information quicker, entries, exits, take profits, stop losses, trade management, filters, opportunities. You can use it in a ton of ways. Analysis, strategy, and trading plan. You name it. So two things. Wanted to show you the fractal concept, first of all, the fractal indicator from a practical point of view, so the theory, the practice, and then use a practice of the fractal in conjunction with something like the wave analysis. So today's focus was on fractals and waves, but primarily how to use fractals with waves, how to use the fractals in engagement with the waves. It's not necessarily a wave analysis that explains, what is waves and why do we have waves and what the waves are. That has been done already in a separate webinar, and I would refer to that one if you have questions on wave. I wouldn't mind answering them now if you do have questions, but mind you that there's a separate webinar that makes sense to look at. So, by the way, before I answer Vinny's question, be aware that on Mondays we have a live trading lab or webinar where I take a look at what I expect for the market on the Forex on Mondays. You can register at blog.binary.com/weekly trading room, and you will be able to join live or get a recording when the recording is ready. You can look anytime you want. Basically, we look at 5 pairs, 4 currency pairs, 1 commodity, and we use technical analysis to look at the market and see what I'm expecting for the upcoming week. We look at price action, we look at candlestick patterns, chart patterns, sometimes waves, sometimes fibs. I have fractals on the chart, etc. And all of these things that I talk about in the webinars now and of the past, most of that will be also used at times at least throughout the Monday sessions. They're at 8 a.m. UK time, they're live. But once again, if you register, you can also have the recording at your disposal. That's blog.binary.com/weekly trading room. So it's quick, it's fast, it's straightforward. You'll get an idea of what I expect throughout the week, 20 minutes roughly, and you'll get I hope, a good advantage with that. So if you have any questions, by all means, now would be the great time to do that. I thank you for being here, but if you have questions, by all means, please let me know. All right, so one more thing about this analysis, by the way. I just want to make sure that this is clear, that this fractal type of analysis, it could be considered technical analysis, but also could be considered a separate form of analysis, which is called chaos analysis, introduced by Bill Williams, by the way. Chaos analysis, it's from Bill Williams, who has fractal indicator created, and also other indicators. It's quite useful. You might want to take a look at that. All right. So no questions. So I hope to see you in November when we will have our next webinar. October, no webinar, as I said. And of course, before we have that webinar, I do hope to see you one day in our live webinar on Mondays as well. Thanks for your attention, and see you all soon. Cheers.